Welcome to the Kendall Report. It is Thursday night ahead of Friday, and a couple announcements here. Just reminding everyone there will not be a channel next week, which sounds sad for me to even say. I'll be out of town all week, and that will be it. I will try to do an update if I can. I'm going to do something maybe brief on the laptop. I'll tweet it out. So if you're following me on Twitter, it's Portfolio Expert, no E in the expert. So Twitter at Portfolio Expert. One other thing that I'm just letting you know, we've had a lot of requests. We just put an affiliate program together for some of our products, the live room and the indicators. So if you have friends you want to tell, why not make some money on it? We'll put the link in. It probably won't be available until tomorrow, but I'm letting you know. And we're going to try to put some videos out, some emails. You can always sign up at kendallreport.com. Give us your email, and you'll find out about that program there. Okay, so let's get into the markets here. And I'm going to do my best to cover a little bit longer perspective. If you watched last night's video, I went through a pattern that we teach in the live room a lot. And I know what I was emphasizing last night, as long as we stayed above the 10 period moving average, this was going to be a really powerful signal that was coming out. And in fact, our models have been long since 39.79, and we're ready to roll here. After today, we got this monster reversal. Yesterday's low was 40.71 and change. Today's low on Thursday was 40.72, so it came within 1 point. If you go back and look at the price action when we printed the 38.08 number, the following day we came down to 12. I think we almost printed down through the low and it reversed, and we had another reversal day. I don't know if this is going to be a thing going forward, but it certainly was today. It actually gave an opportunity to buy basically yesterday's low and get into market. We had over a 100-point rally off of those numbers. So it was pretty substantial, and it was one of those rallies today. We were in the live room just watching it just grind out. It got moved up to the 41.30, 40 level, then consolidated, went to the next level to 60, and then right into the close. We printed all the way up to the RXT number yesterday. So I've got some things I'll continue to talk about this trade. I still think we're going to see 43 handle print at some stage here, and I don't think it's going to take that long, but there is some resistance overhead. I'm going to do my best to set up things for you folks, and I don't know what kind of activity I'm going to be able to do while I'm out of town, but I will be watching things. So make sure you, like I said, Twitter is going to be the place to find out, even if I do post some kind of video. If you're subscribed and hit that bell, you'll know that I posted something. So big reversal, that's number one. Let's talk a little bit about a couple things that happened yesterday. The claims came in better at 200,000. Continuing claims were at 1.309, down 34K. So the labor market just keeps getting tighter. I talked about that last night. And we're just continuing to, I guess, see this type of action where the labor market gets tighter and tighter. Factory orders actually missed. They were expected to come in at 0.7. They were at 0.3. ADP was about half of what it was expected. Nobody was really paying attention to that because the markets were rallying, and supposedly it was all about Microsoft yesterday with their guidance. And I saw a comment somewhere earlier tonight that somebody said, well, it just took a while for the market to figure out what the bad earnings and forward guidance really meant. It didn't mean what they said it meant, but it meant something else that was bullish. It's just amazing how people will dig so deep to try to come up with an excuse of why something happens in the markets. But the technicals were in place. Everything was set up there, and so we did get that rally. There's a thing that I want to talk about that before we get into expectations of employment numbers and things tomorrow. Something came in today. Productivity dropped by 7.3%, and that was the largest drop since going back to 1947 in any one period. And I think maybe, just maybe, we're finding out what working at home productivity really looks like. And, I think Elon made it pretty clear the other day, like 40 hours in the office, at the main office, or you don't have a job here anymore. And I think it's time to realize, well, there are some things that can work out pretty good from a work at home situation. I know a lot of people are into it. Why not? Why drive to work? Why go to the office? Why deal with, office mates and office politics, what have you? But there's something to be said about productivity when humans get together in one spot. And I think that's really what Elon's talking about. And I think this number maybe is reflecting some of this loss in productivity. And just a concept, just a guess here, we'll say it right now. But the point is that productivity is the key to everything. And one of the things that we've seen over the last couple of decades is productivity has skyrocketed through technology and other things, and that is a big deal. So, but to see it drop like this with the technology we have today, that's somewhat concerning. And I still think, that will be a factor that I'm going to be watching. It kind of really triggered me today looking at those numbers. So this final thing to talk about before we get into the technicals is the employment report, expected to show 310 to 325 estimates out there. The unemployment rate expected to drop a tick to 3.5%. And then we also have ISM non-manufacturing expected to come in at 56.4. All eyes will be on the employment report. I don't think the non-manufacturing report's going to mean much. But this is going to be, I think, a significant report, but I don't have any expectations of a miss. ADP came in, like I said, half. Does that mean these numbers aren't that correlated? And people used to equate that to there's going to be a bad report we're going to miss. And it's just hit or miss on that as well. It might come in worse on ADP and it's better on the actual employment numbers. So we'll wait and see what those numbers are like. My expectation is it'll probably be somewhere close to that. Even unemployment unchanged at 3.6. No big deal. I don't think there's much to see here, but maybe there's a surprise. Everything seems right now to be stabilizing a little bit from the standpoint of the markets and what we're seeing in action. Today's reversal, and I'll get into the technicals here in a minute, was pretty substantial. And when you see those types of things happen, they have to be noted. And I would say I was expecting it, already had things set up. But let's go ahead and get into the database, and I will also set this up the best I can for the intermediate database as well. So let's get into that. So fair amount of action, 916 new buy signals, 96 sell signals, 49.51% bullish. So we're pushing this up. This is that 48 threshold I talk about. Next number that we're going to be watching for is actually way up at 62%. In between here and there, nothing matters. 62% tends to be about as far as it goes in most of these kind of sequences. Here's what will be a game changer is when and if we get some traction on the intermediate database. Right now, it's only 10% long. The last, I think, 6 weeks, maybe 8, we've not seen any traction. We've just seen a continuation with these numbers just not getting any traction. And I expect that's going to continue, although with a 50% bullish on the short term, it's possible we start to see a little bit of traction on the intermediates. There's still, if you look at a lot of the patterns and bring up a weekly chart, it looks just like the S&P is a ways away from getting anything that looks like an intermediate buy signal. And that will be, I think, weeks away before we see anything like that. Okay, I'm going to be going through a number of things here. I'm going to use the S&P as I usually do to set up all of the indexes from the standpoint of expectations, do my best to kind of set the tone for next week. So let's take a look. We did manage, one of the things I was talking about is getting above this 40-period moving average. We closed above it yesterday. Let me bring that over on screen so you can see these numbers. So yesterday, the 4178.25 was RXT. We printed up at, let me get this number up here real quick. We printed to 41.79 even. We closed at 75, just below getting RTXL. After on the reopen of the futures, we did see the futures continue to move higher, and the high so far has been 89, and R1 is 41.99, R2 42.25. I'm going to go through some of these numbers that I put out last night just so we can get a handle on that. And so this is the second day. I will say yesterday we closed above the 40. Now we're above it overnight. That number right now is 41.6354. The low's been 75, highs 89 so far overnight. I do expect, however, that we're got a good shot at printing down to 41.51, which is S1. So I'm not sure we're going to be able to get over that 4,200 handle, but we could. S1, R2 would be 41.50, 42.25. We've really juiced up the volatility on a daily range up right now, pretty huge. We're looking at right now about 100-point expectation from high to low. So we easily could get an S1, R2. Don't think we get an S2 where we print down, but the way we've been acting lately, the volatility is so high, we could see an S2, R2 type number. I don't think we see anything close to R3 tomorrow. That'd be 42.51. So if we recall some of the numbers that I put out last night, let's talk about those. And matter of fact, I'll just draw in the pattern real quick and talk about the numbers. So the pattern is this one here, two down, and then the expectation is that we're going to go up, and I drew this a little more aggressive. Most likely we're looking to possibly test the 200-day moving average. That would put us at, I mentioned these numbers last night, but you might want to write these down. 44.66 would be where this 1 and 3 are equal, or A and C, depending on how you want to count it. The expectation from my viewpoint, and I showed you last night, because of the downward shaping moving averages on a weekly basis, that around 4,300, 4,315 should be the top end of the range. So we do the only a 0.618% of the length of this wave. It's expected wave, the wave one was 395, so that brings us into 244 long, which suggests a move to 43.15. And we'll go over to the weekly because I want to set that up. But this is the pattern that's being expected here. The buy signal over here came in at 39.79, and it's been on for about 8 days now. Came right after a little breakout of the 21 period moving average. And so we're looking at a continuation of this pattern, and it's likely to be really I think substantial on this next move. So let's go over to the weekly, and we'll set up some things. I'm going to bring up TradingView here in a minute, and we're going to go a little bit longer term. So here are the things that are going to keep the market somewhat from going much higher. And that's the PPM1 at 0.84, suggesting that the 42.17 is going to be pretty substantial. I didn't mention this number, but a 0.382 length of that wave would put us at 42.21. So it's lining up pretty good with the 10 period moving average. So if we did trade that quarter, 42.25, which would be R2 for today on the daily, then we could see a rejection from that level. And so we'll see how this all sets up. If you recall, I was talking about the weekly reversal last week that was coming in. Well, we got that. A higher close above last Friday's close, and that is 41.55. We'll confirm that cycle and suggests that we're most likely to potentially move up to the 40-week moving average. 4431 is very close to the same number that the 200-day moving average is. So this is the expectation. The downside is going to be most likely limited. We printed this 40-70 level 2 days in a row here. That's going to be your key pivot for the moment. And really on a daily, use a simple 10-day moving average to follow this thing. If it takes out the 10-day moving average as it's rising up here, then I would be really cautious about trying to hold on this pattern. So it's going to get really tricky the next couple of days. Sorry, I'm not going to be here to hang out and help you navigate this, but the patterns itself are still negative on the weekly, and the PPM 2 is actually trying to turn up. We're about to take out the first derivative. It's at a minus 0.53. So it's likely we could penetrate through the 10 at that 42.20 area and go up and just print up to this 43.19 area, or 43.15 is the actual Fibonacci number, and that's the moving average. So you folks know that I like these clustered numbers. So okay, let's go over to TradingView, and I've got a long-term chart here. I want to bring up this 3-month chart, and this is going to continue to be a dialogue here as we go forward. And this, I'm just trying to get this scale just so it looks a little better here. Bear with me a second. Yeah, so what we're looking at is we actually, on a quarterly basis, the 10-quarter moving average is coming in here. Hang on one second, trying to get to the data window and get to the right number. Yeah, so we're looking at about where we bounced off of was 38.14 was the quarterly number. I thought that was ridiculous to talk about a number of weeks ago, but we did hit that. We bounced off of that. We've got quite a few days to go before we get to the end of the month. It's the second trading day of the month, so we've got all the way to June 28th, and I'll be talking about this 45.30 number. If we stay under that number, then we're going to be really set for a multi-quarter decline. So the fact that I'm talking about a short-term rally here doesn't mean I'm getting bullish, but I'm telling you as we speak right now that it's likely that we're going to at least see this rally up to 4,300. If we start to get traction in our database, I will go with that. We're going to have to get well over 22, 28%. Same metrics that I talked to you about when we're looking at the daily. There's a lot of work to be done. We're at 10, 11. We'll round up. I think it's 10.9%. So there's a lot of work to do. I've seen circumstances, especially after we've seen maybe a couple weeks of forming a pattern here around this between 38 and 42. We've been working this area, so a lot of stocks is starting to maybe put in bottoming patterns and could get signaled into intermediate buy. We just have to wait and see. That's why the database is what it is. You have to adhere to that. So as far as next week goes, I will, the good news, those of you that have the indicators, I've been telling everybody, get the indicators. You're going to have all the numbers you need and the guidance. There are videos on how to use stuff and all that. And so, and you do get access to the trading room, even though I'm not going to be around next week. We're going to figure out how to extend everybody for a week. And I did an extra hour today. I did 4 hours with everybody today. So anyway, just make sure you go over there and the links that you hear at the top of the page. So Kindle Report /.com/indicators. All right. So yeah, just don't miss out, because it's going to be impossible to get to do anything on a regular basis. Yeah, I think there was somebody, Stephen Heckler. You're welcome. Yeah, I love all the bearish comments. Awesome. Thank you. Appreciate it. Okay, so let's go on. So I'll stick with the weekly chart here on the Nasdaq, and actually I still have the models on here. The Nasdaq models right now are short from 15,807. So it's been short since, this is weekly, since 12/24, so Christmas of last year. So it's been short all year, and we're still not close, that I can tell, to getting out. But one of the things that is happening, this seems to happen all the time when it comes to the Nasdaq, the signals and the PPMs tend to be a little bit ahead of time. We're getting a crossover on the PPM 2 over the second derivative. That's somewhat positive. So we're starting weekly, and then we're going to come down to daily here. I just want to lock this in. You know, these ranges, that this low on the Nasdaq that we printed last week is huge. This week is pretty tight range, actually, as we look at it. 12,442 is the low. And so watch if we can get above this 10-week moving average next week. That could set a tone to move up towards the 21, which is 13,790. Seems a little optimistic, but it looks like this pattern is setting up. I talk about these bubble patterns on the market grid, and they tend to start a little bit of a sequence up. So we're probably realistically completing this little large ABC down. I'm going to show you what I'm talking about here real quick, because I want to set up the longer term here just a little bit. So I'm just going to draw in a rough pattern. So we're probably completing this little pattern here. And if we did the math, I bet we came really close to 1 and 3 being equal. So now what we're trying to do is maybe we're just setting up some kind of zigzag. We're going to stay underneath these averages here, and we're going to set up a big consolidation range. I'm not sure. I've been talking about it in the live room, and I discussed it the other night, I think. I went into a very deep dive in the live room. I'm going to see what that video looks like, and I may just publish that for you folks out of the live room, because we make recordings of everything. So but we may just end up in some kind of consolidation, and then down the road, maybe after we get a confirmation on the quarterly chart, maybe we make a determination what direction we're going. And with my expectations are that if we bleed off all this downward momentum, then we're going to set up a pattern that maybe is larger, like what I've drawn in here, staying within the bounds of this range here. That's going to probably be a really broad trading range. It's going to be tons of opportunities. Trading ranges, especially, I was talking about this in the live room today, and I'll just bring that up real quick, is when you have these kind of ranges, even on a daily basis, the amount of opportunity here to trade in these ranges are absolutely huge, especially if you can establish early on that these ranges are setting up. And if that happens, you know exactly where the bounds are, where you can buy and sell against. And especially option traders, you guys have an edge on trading some of that stuff, doing straddles, doing a bunch of different types of strategies you can do, not just outright buying puts and calls, but actually putting straddles in these ranges, collecting lots of premium, and maybe using that premium to play in the middle and leg in and out of options, whether it be calls or puts. But the bottom line is, if this pattern does set up like I'm talking about, we're going to have multiple week trends, but nothing is going to go too far outside of these bounds. And I think that's building somewhat of a consensus with me, especially as we come into Q3. Been expecting there's a possibility that we get a positive Q3 here from the market standpoint. Okay, we're going to have GDP update. Maybe we get a technical recession, maybe we don't. I don't personally care whether we do or not. It doesn't mean anything. The markets aren't the economy, and the economy is not the market. So what we're trading in right now is just a lot of valuation issues. There's a lot of debates going on in the marketplace, and I'm not talking about people talking. I'm talking about cash flow in the markets, and that's where the best debates occur, when you see the price discovery and things going on in some of these ranges. So it won't take much to get, let's say, expensive, and won't take much from in these levels to get cheap in these patterns, and you see the bargain hunters. So what I'm saying is, these trading ranges are a godsend, because you absolutely can just lock in on some stuff and trade these ranges and almost fearlessly make some money. I'm not saying that it is that way, but I think that's what we're about to enter into. It's one of my favorite times to actually trade. Trends are fun and all that, and you can sell, but especially this size of volatility, this is really important. So let's go over, and let me bring it up here, and let's go to the daily. I'll go back full screen. Daily has that same pattern been talking about. We got a buy back at 12,250 on the 27th of May, and we're setting up same pattern. I think I'm still looking at that truncated, what I call truncated pattern, where this next leg is only a partial length of the first leg, so 0.382. So you can do the math from the low to high, and then you measure from this pattern here. And today's low is going to be your measurement, 12,442. I don't have the numbers like I do on the markets here. Hang on one second, folks. We got us a bot. Let me get rid of this. Okay. Hopefully that will get rid of this bot that showed up. Sorry about that. So yeah, so that trading range is huge. Bear with me one second. Okay, so let's go to the Russel. So I talked about last night these Fibonacci targets here for 1870. That's already been satisfied, but 1923, 1956 on the Russel. This is the cash Russel daily. Look at the PPMs here. We've got confirmation across the board. PPM 3 is now taking out its first and second derivative. This is really positive. We're going to see these markets go higher for, I'm thinking, somewhere between probably minimum 5 to 8 sessions it's going to take to form this. So hopefully they'll wait for me to get back from my trip. Let's take a quick look at the weekly. Weekly has similar numbers. 1972 is the 21-week moving average, but look what's happening here. And I've talked about this for a while, is that this Russell pattern is possibly going to lead us off this low. And I've been saying that for probably the last month while we traded right down to the 200-week moving average here, and we got a rounded bottom. PPMs are trying to turn up much more substantially on the Russell than they are the others. So we'll see if this does end up being the leader, but I think that's the case. I showed you the spread charts last night. Won't go through that tonight. But this is, I think, a reasonable pattern. Up to 2110 is likely, but if you look back, that's pretty much the upward bounds of where we've gotten is around 2100. I'm not sure we get much further. I don't have any expectations at the moment of all-time new highs in these indices or anything like that. I just see what we're doing is seeing a rotation here, and sometimes you see a short-term rotation that ends up going into intermediate. We'll find out a little bit about that. I'll try to put a tweet out or something with the numbers that come out of the database. I'm pretty sure it's just going to be, I'm going to be a scatterbrain the next couple of days just getting out of town. So I'll do my best if I can take just a minute and do a snapshot and get that out to you folks. Those of you who have Wavetech, you'll know what the numbers are. And hopefully, like I said, I'm just telling you, I know a lot of folks depend on these daily grid numbers. So just get them so you have them forever. It's one time. It's not an annual fee. It's just one time. Okay, so let's move on. So staying with the weekly chart to start, this is the pattern. It's interesting, the pattern that's set up here. We have that rising 10 pattern through the market grid. We're just kind of holding right in there. We did last week close just below that number, we'll call it 2.78. We closed at 2.74 this week. We opened above it and stayed above it. Right now it's 2.82 and closed today 2.91. We're kind of at the ceiling here of this range. We're looking at RTX 2.999, 2.93 is R3. So we're trading right into that R3 level. I don't expect we're going to get through that. The PPMs are still strong. They're still up at 1.51, 2.35, and 2.9. So there's still an upward trend in yields. We managed to get down to 270, 271 the other day, and then we bounced right back last week. So expect this. We'll probably see the market grid actually turn up on Monday. And this pattern still looks like the yields are going to go higher and bonds are still going to have pressure on them. Let's go over to the daily. You see this pattern. We did get an RXT sell yesterday, and we did get sideways. PPMs are trying to turn back up, but we're basically mixed here, and there's support right at this. We're just going to call it 285. So worst case down here is 268 to 272. On the upside, I think we stay below 3% here without any problem. Let's take a quick look at the yield curve. Yield curve steepened back a little bit. Like I said, it doesn't look to me that there's a pattern here that's going to be detrimental to the yield curve flattening substantially. We're likely to stay just in a range here from that standpoint. I don't see any risk at all in that. And while I'm gone, if it did go, it would have to go back really and invert to really be concerning. So the 530s, if they were to invert, that would be significant. We're currently at 17 basis points. Next market we'll look at is the crude oil. This is daily crude, still climbing up. PPM's still in trend mode, even though we got a little bit of a dip intraday yesterday, but it came screaming right back. We did get down to 111.20 and high was 117.70, closed at 16.87. We're at 16.64, down a little bit here. The key number to watch is going to be just a simple average, 114.02. I think we'll stay above that. And there is something interesting to watch for, is this dot that you see here where my cursor is. That is a signal for a cycle coming in for Friday. So that could be a top cycle. And here's what you'll be watching for. Whatever the range is for this session, if we close above it, that will suggest we get a continuation pattern. If we close below whatever the low of today is, that's going to suggest we're going to come back into some of the support levels around 110, and 105 is substantial support when you look at the weekly patterns here. Let's take a quick look at that. I've been talking about this, that PPM1 is really starting to roll over, losing a lot of momentum, and that key support's right at 105. Break below 105, then you're looking at the possibilities back to 198. Looks fairly low right now, especially with these huge PPM numbers that are in this trend right now. So it should continue through that. Last couple of nights I've been talking about the XLE. We did see a little bit of flattening. I'm just going to bring it up. Do have some higher projections. This is weekly, looking at 99.56 is the next Fibonacci projection, but I think we're going to see a flattening here of the stocks. We're going to stay in a range. We should stay above the 10-period moving average, and those of you that are following that ETF hack in Portfolio Expert or Wavetech, then expect to see maybe on the short-term stuff, the dailies, we might see maybe a little building of cash. Last we looked a couple of days ago, that strategy still pressing it hard up, like 95 or 98% bullish. So pretty nice rally in gold yesterday, actually. Surprising. Dow was a little softer and continues to be softer, but we got back above some of those key numbers. I was talking about 1850, we're at 1875, so decent rally. We're starting to see PPM2 turn up, and this may be where PPM2 gets a breakthrough, the first and second derivative, and that could signal that we're going to start to see this move up. The issue that is there, but it's starting to bleed off very quickly, is the 10-period moving average right now at 1900. That's going to be your barrier. We did get a close next Friday over 1900. That would be pretty bullish and setting up probably some new patterns. We'd probably see some new Fibonacci targets and what have you on the upside. Next market is Bitcoin, and I'm going to come up after I finish this, and I'll tell you what we're going to do to close out tonight's video. But this is amazing to me. This, for the last month, I brought this up last week, but it's continuing. The close was 30,276. The next week, 30,136. Next week, 30,333. And right now we're trading 30,546. This Bitcoin has been flat since we got the collapse and blowout of all the stable coins and that entire collapse. And I'm still convinced that what we're seeing is this churning, and folks repositioning what's left anyway back into Bitcoin. And I think the stable coins and other things absolutely scared a lot of people, or maybe taught some lessons that they needed to know. Let's take a look at the daily. And we actually got a buy signal a couple of days ago at 31,744. So just looking, you're going to have to get above some of these numbers, but look at ppm 2. It's actually just vertically right now. ppm 1 and ppm 3 are all trying to turn up. So if we get a click through ppm 3, those of you have the indicators, if you see that, then on a daily Bitcoin, you should probably going to see it move up toward the 34 levels, something like that. And like I said, I mean, look at even the daily, how tight of a range it's been in. This is for you know, a long time, for weeks that we've been locked in like this. So it's pretty amazing. That bot's still hanging around. Hang on one second, folks. We are getting hammered. Okay, so overall, I think Bitcoin is just going to remain stable. I think we will see it move up to 33, 34, and we're going to have to get some things over there. Okay, folks, I've got a few minutes. Let's see what time it is. Yeah, let's do this. Let's talk about whatever you want to talk about. Let's ask some questions. See what you guys got. Well, I'll cover a few questions. Maybe even go through a couple stocks or whatever you want. So you got just a couple minutes to ask me, and then we'll see what happens here. Yeah, Casey, I've been calling for 22K too, but it just we're starting to see these PPMs are starting to turn up. So anyway, okay, I'm gonna. Okay, yeah, we can do that. You caught me just in time, Red Rocker. I was ready to pull the plug here. All right, let's talk about the Dow just for a minute here. Let's go back. Let's go to weekly Dow. We basically peaked out up here at 105. It was interesting. I remember when these fib targets were coming out, they seemed pretty ridiculous, 102.99. And we basically exceeded that, and now we're coming back under moving averages. PPMs are still reasonable. They're in trend mode on a weekly basis. But I think we could head back probably just below par here, maybe down to print into the 99 handle, and you should stabilize right there. Now we got the Ron Walker guys going. Man, yeah. You guys are seeing these bots, right? Okay, I finally killed one of them. I'm sorry, folks. These things really, they bother me. What else? What else you got here? Go ahead, Casey. Okay, I noticed that towards the end of today's session, SPX traded above the E-minis. What does that indicate, and why does that happen? So you're talking about the cash. That will happen sometimes right at the close because they're squaring up trades, and you'll get the what's called the runoff on the index, and that will that oftentimes will cause the index to print up, and then the futures, since there's no cash market to offset, it's closed. You can't do anything with the futures there, so the arbs are broken then, and so they can't do things against SPY versus the futures and all the stocks and everything. So you'll see that right at the close if that's what it was. Yeah, Brooklyn Trader, just kind of interact with you guys a little bit. Yeah, I don't think that QT doesn't matter. It just doesn't matter at the moment. And I'm not sure that, the market had pretty good couple weeks. Yeah, the SPX number is 4530. Ah, Red Rocker. Very interesting. Yeah, I am doing that. That would be very cool. Send me phone number, contact stuff. I might already have it. I'm not sure, but send it to me so I make sure I got it right. To info@Kendall Report. I don't think it means anything, Casey. Not necessarily. I mean, we got a little bit of a bid in the futures overnight. We traded up to 89. Yes. Greg Donaldson, yes, 45.30. Let's see what else you guys got going here. Monkeypox. That's pretty good. You're welcome, Carly. Let's see here. Yeah, hey, Gary. Yeah. Yeah, that works for me. I'm going to be around through, not sure, I'm going to be moving around a lot. I'm going to be between Austin and San Antonio and Uvalde and all over the place. If I were in cash, it depends on what my orientation is from the standpoint of what is it you're trying to do. If you're all in cash, that's a tough one. Yeah, I'll just come back on screen when I'm talking to you folks. Yeah, I don't know. I would have to know so much more to answer that question. I don't see at the moment any longer term ideas or even intermediate until we see our database starting to come back online. Short term models and things that we have going are actually have a lot of noise in them. Let me just take a look here. Yeah, so someone asked about Apple. Let's bring Apple up real quick, okay? So this is weekly Apple. we're getting that same pattern. What's interesting is we have a cycle low coming in for this week. The warning signal came last week. This was along with the rally that we saw. There's still a lot of downward pressure here because we've got ppm1 at minus 0.147. So expect to see a ton of resistance, 157 to 162. And we probably will stay somewhat sideways. I don't think we're going to be able to get above that. If we do, it probably won't stay there. Probably get rejected from there. Yeah, so on the ABC pattern setup, let's talk about that. Yeah, so if you can recognize that you have that perfect example, I laid it out last night. If you go and watch last night's video, I went through quite a bit of intricate setup there where we already had the wave. Our model came in at 39.79, but forgetting even that, we got the high, then we came in and we came right into that right shoulder, into the moving averages with the ppms turning up, all that. You want to buy on that right shoulder. That's your safest place to buy. Where the models bought, there were a lot of things telling that were signaling that we were going to challenge the 1021, and that's the beginning. So our models actually look at the probabilities of what is like the probabilities of trend emerging. So it'll come in early. There's actually 3 different entries. I won't go through that, but the entry we got on this particular trade is the early entry, aggressive entry, and it signals that we're going above the averages and that we're going to start that pattern. So once you get that stuff, and we already have ppm 1 and 2 all in place, then what we're going to see next is we'll pull back to that right shoulder. It's classic, like cup and handle, whatever you want to call it. There's a million names for it, but you come back into those averages. You could also even do a Fibonacci range in there, 0.382, maybe 0.5. But especially if it lines up with the averages, you want to come in on that right shoulder, and then you buy in the right shoulder, and you have to take out the previous high to confirm, and then you start using a couple things. If you think it's a impulse strong wave, you would take 1 and 3 equals minimum, or you take 1.382 times that, or 1.618 times that. In the example that I did last night, it was the opposite. I don't think it's going to be a 1 and 3 equal. I think it's going to be what I call a truncated move or a corrective wave, where it'll rally maybe 0.618 of the length. So then it gets rejected. And what I'm basing on at the moment anyway is that those moving averages at 43.13 on the S&P would be the rejection point. Man, these guys won't give up tonight. Okay. Yeah, those are just some ideas. If I can get through the bots and see if you folks have Amazon split on Monday, huh? Yeah, I don't know. That's a loaded question, Casey. I don't know. Those are hard to figure out. I'm just going to go. If unfortunately I won't be here, like I said, to guide you folks, but you've got the indicators, so I would just say, let the indicators guide you. Use that simple 10 as a guide on the daily, and just watch the rejection points at 42.20. If we get through that, then 43.15, and then the extreme target would be the 200-day at 40. We'll call it 44.30 in rough numbers. I don't think they're going to ease up. They're, I, you know, listen, the dog's wagging the tail again, so the Fed's out of control, and they have nothing to do with anything anymore. And what I mean by that is market forces will drive the the rate changes. They are now following the market. They no longer have the control of telling the market what it's going to do. The market's going to do whatever it's going to do. And so if the perception comes in that interest rates or that inflation is going to continue or even accelerate, they're just maybe they take the yields higher. But the markets are driving the Fed right now. It's not the other way. Fed's just trying to do their job. And I thought it was interesting. I mentioned last night that Jamie Dimon had talked about this hurricane coming at us, right? And so we know it's not coming because I saw the joker Peter Schiff telling us it's a Category 5, so we know it's maybe not even hurricane. Okay, so the point is that I it's very difficult to figure out those things. I'm going with the technicals, the 45-30 trigger. That's going to give me some indication, and depends on how we get there. Let's say we get to 45-30 by the end of the month. What if our intermediate database has 42% long, and I'm like, wait a minute, this is a sustainable rally. So I'm going to stay with the data. Trying to predict too far in the future, there's a little point in doing that. You want to wait till you get the confirmations. If you're trading, you're looking for the patterns that's set up before you make a move, those type of things. And that's pretty much it. Yeah, thanks, Tommy. Appreciate that. Yeah, I mean, the Fed's totally irrelevant. Seriously. Um, it's, for years you could, the Fed put was there, and, you know, even if they don't, let's say they backed off, the markets are still going to go. Yeah, look what they didn't do anything, and the market adjusted itself by almost 75 basis points. The 10-year went from, you know, initially from 150 to 225 all the way to 316. Now it's backed off a little bit, about a half a point, got a little ahead of itself, but that's how it's going to be from this point forward. And we'll just see how the trends are still higher yields, all that's still there. There's lots of support on yields coming down, or otherwise resistance on the bond market. If we had the bond futures up there, there would be resistance there. So I would not worry much about the Fed. That's, I believe, all noise right now. So that'll be, at least that's my perspective at the moment. Yeah, and somebody's saying that it does the opposite. That's pretty much it. Yeah, I don't know who Jonathan is, but yeah, listen. If one of the things, and I mentioned today, Casey, in the room, that you have to have a solid process to make an evaluation, and that's what I do every night. I've been doing this for. I've actually had the YouTube channel, I want to say, for 6 or 7 years, but I used to do just a weekly video, and it was just for our clients, and it never got picked up by the algorithms. In 2020, it got so complicated. I used to write daily market commentary, written commentary, in our behind a firewall on our website on VPN Partners, and it just got so complicated one night when the pandemic happened. I just said, hey, I'm going to start doing videos every day. I'll post those. And I came in one morning, I had 7,000, 10,000, 30,000 views. It was crazy in 2020. So, so I just continued to do them, and it's been a great way to communicate. I've met a lot of new people, a lot of good things. So, What do I think about Jamie Dimon's comment? Yeah, I mean, I talked about this in the live room today. You know, we can all see that storm, right? The QT storm. Is it going to, it hasn't even started yet. So no one knows the real effects. Markets are going to anticipate some of this stuff. But as far as, you know, I made the comment in the live room, Jamie Dimon's got a reasonable track record of some of his comments. There was, I think, 2018 was I think it was the Jamie Dimon low. And, he said the markets weren't that bad or something. Markets bottomed off of that. Listen, I think it's obvious to see what's going on. What's not, and I talked about this in the live room, so I'll just bring this up real quick. It's kind of all tied together. The whole concept that somehow the Ukrainian-Russian war is over, that there's going to be a huge rally, is just so much BS. Let me explain why. It ends tomorrow. The goal of the West is to cancel Russia. So even if the war was over, Russia's still canceled. So they're actually, I said this, the West is giving every reason for Russia to continue what it's doing. And it's going to. They're not giving them incentive. The ruble's higher than it was before all this started. So all of these tactics, they're not working. They moved to make the ruble backed by gold, and you just go on and on. They're combating this war against them, economic, and meanwhile, Europe needs the natural gas. And I'll tell you one of the risks of the whole natural gas situation and all that is right now we are actually shipping a lot of our natural gas in the U.S. Those of us in the U.S., they're shipping that gas out to Europe to help their problem. Well, guess what? We come this winter, we're likely to have shortages here in the U.S. So it's just kind of, it's crazy when you try to cancel a major player in the energy market. And it's like any market. If you remove a 10 or 20% player in a market, you're going to have shortages, especially with demand where it's at as high as it is. So I guess we see the storm, going back to Jamie's comment, everybody sees the storm. The Ukrainian war being over is not going to change a thing, I don't believe. There'll probably be a sentiment bounce, like hurrah bounce, and then everybody's going to realize that nothing changed, that there's still shortages of oil and there's all these disruptions and all these sanctions are going to continue on. So no matter what happens, nothing will change from an economic viewpoint. And I still don't think we know the unintended consequences of that. And I usually don't talk about stuff like this. We're at the tail end of this this week, and I'm going to take a break. So I think it's good to have some of these chats. I don't get a chance to do this much anymore. I used to do my live streams every week. I miss doing those, actually. They were a lot of fun. I got to just kind of freelance on a lot of stuff. But I just think that the QT, we don't know what it really brings. We don't know if these guys how well they're going to execute anything. And all they're doing is letting a runoff happen. So as securities mature, they're just letting them go off. The big deal is that the Fed's stopping to buy mortgages. That's going to be the biggest deal to watch. So there's a lot of things that we don't know the answers to, and we're just going to have to watch and see. We're coming into, I believe next week is when the real QT starts for the first time. So we're just going to have to watch and see if there's any cross currents or anything that happens here. It's not going to be very easy to determine. Yeah, I don't know. Listen, we could go on all night. I'm looking. Yeah, they've been absolutely, Jason Burt. Yeah, they've been war for 800 years. Exactly. Yeah, and I believe that about India as well. Absolutely. I'm just looking at some comments here. Yeah, I think second earnings quarter earnings probably will be a disaster, but I think everybody expects them to be a disaster, so it doesn't really matter. Yeah, Michelle, I did talk about that in the opening comments, so on the replay you'll be able to see that. What are we getting here? Hour and 10 minutes. Yeah, markets are better liquidity than they've had for a while, I would say. We did 5.6 billion shares today. It's down 5.73%. And by the way, man, I could go on and on. And yeah, FX, you're right. It is debatable if they're even a legit country. So anyway, folks, I think we're going to call it here. I'd love to, maybe that's what we should do sometime. I should have a live stream and we just do this. We talk about things. I'll bring up charts and just have a chat. This is fun. Red Rum, I agree with you. Yeah, it's really interesting world we're in, folks. And, it's felt like this. Listen, I've been around and I've seen a lot of conflicts and things over the years. It's felt like this before. Like you're on the edge of the next big war. Not sure anybody wants it, but it doesn't take much to get things to escalate. And certainly the U.S. sending all this money and weapons and stuff. You got a crazy man that's rumored to have cancer and dying with his finger on 6,500 nukes. It could get pretty scary. And if that happens, then it doesn't matter. Yeah, that would be perfect, FX, a rant stream. We need to do that. That would be fun. Because I really, this stuff really is quite stimulating to talk to folks and do this. So anyway, okay, folks, this is it. I'm signing out. We'll see you a while from now, a week from Sunday. I think we'll work out. I get back this following Saturday, so it should be good. And thanks for the safe travels and everything. So, folks, have a great evening. Thank you so much for watching. We had a fair amount of people hanging out, so that was good. Thanks again. Be safe. Be profitable. We'll see you next week. Get the indicators so you know what's going on. And remember, we're putting that affiliate program together. I think that's going to be pretty cool. We've actually had a number of people asking for that. So that should be done. And you can sign up at kendallreport.com just to get on the mailing list so you can get that affiliate links, and pretty much anyone can get involved. So anyway, yeah, thanks, Jason Burt. Marty Cohen was an awesome guy. He was amazing. I did get a chance to chat with his wife, so that was nice. Anyway, so thanks again. Yeah, let's peace, everyone. We'll talk to you soon. Hey Puma, if you're listening, I am not going to Dallas. Yeah, hit that like button, everyone.